Hi everyone, happy evening. I hope you're doing well and I hope you had a wonderful day and you're ready to get into the topic of what the FIIs did, what they're going to do, and what should you do with all this information. I'm not a big banker on this FI information. Yes, it gives us insight on what is happening on a macro level, but in terms of what it does on an individual stock level, it's very hard to see because the data is not really granular. It is more like clubbed together with everything happening in the market. So if someone is coming to buy lots of Airtel on a block deal, that gets clubbed with this, like Bain Capital gets clubbed into this, and so it's really hard to see clearly what is happening in terms of movements of foreign investors in India. Same way with the domestic investors, it's very hard to see. But it does give us overarch what's going to be happening and where are potential opportunities going to come for value investors. Because if they're net sellers in an area, because they have their own reasons for selling, maybe as value investors, those P areas we should also look at because we might find great bargains there because they're looking at exiting those areas if the company is good, which I'll get towards the end of the video talking about how you should look at valuations for these companies. So what's been happening in the last financial year? I'm talking about financial year because we are coming to the end of this financial year for us and usually we take a roundup, so we're coming to the roundup. So what happened? The first half of this last financial year, 28,000 crores worth of buy-in was done by the FIIs, while 2 lakh plus lakh crores was sold by the FIIs, where the net was 1.53 lakh crores. That's around $17.8 billion are being withdrawn by the FIIs this financial year. So what are the major sectors that have been smashed? Of course, the financial services, around 57,000 crores, FMCG, 36,000 crores, auto and auto components, 35,000 crores, have been the sectors which have been affected the most thanks to the FII selling in India. And why are they selling is the next question which you'll be probably thinking about. One, like we have said you multiple times, high valuations. So this is high valuations not only in terms of India and where they are in price to earnings, but also in comparison to what is happening to the Asian peers, that's China and the rest of Asia around us. They're finding better opportunities in terms of valuations compared to these companies and these stocks. So they're moving into those areas. So they're booking profit here. Of course, the weak corporate earnings. We've been talking quite a lot about this K-shaped recovery and the Indian economy, the pains we have been having in the Indian economy, especially in the bottom of the economy. So that corporate earnings has been getting very weak in India. So that has been another reason they're selling. And of course, the US bond yields and the dollar strengthening. That is money being exiting from all over the world, heading back to home base, that's US, because they're getting great returns just holding dollar and holding government securities there. Even Warren Buffett was famously saying that last year that it's much easier for him just to hold cash and to buy US securities because it's giving him great returns just holding cash. And of course, the rupee was falling. We went down to 88, which was the lowest. From there, we have come back. So what has happened so far? Well, what is the year forward looking? Recently, the last 4-5 days of market days, the FIIs have been going through a rebound. They've been buying for the last 4-5 days. They've already bought 19,000 crores worth into the Indian market in the positive side compared to their selling. So that is it a story of hope? Is this the worst over? Why are they suddenly buying into the Indian market? The Nifty is down from an all-time high of 10%. That has opened up valuations. The rupee is becoming stronger, which has given more hope for them, for the FIIs. The cooling inflation data in India, that has also been some signs of hope for India. And of course, the main thing which a lot of you are not forgetting is they also short the market and they could be taking short covering positions in the market. That also could be explaining why the FIIs are buying into the Indian market in the last 4-5 days. So for this trend to continue, what will be the reasons for this trend to continue? One, you see a strong recovery in earnings. So if you see the next quarter to quarter earnings in Indian corporates, if the earning recovery is there, then probably this trend will continue. If the US interest rates peaks, meaning the Fed starts cutting interest rates, might trigger more FII inflow into India. The weakening dollar create more inflow into India. Of course, the changing of risk appetite, meaning right now there's a lot of things in the world which is creating a lot of risks. Of course, we're talking about the tariff wars. Last whole financial year, it was about the US elections, it was the Lok Sabha elections, it was the China stimulus. All these things were creating fault lines and earthquakes in our market. So this going forward, so far, the uncertainty, of course, is the tariffs, the Trump's tariffs. The important date is, of course, the key date is 2nd of April is what we have to keep an eye on to see what tariffs really come into effect. Because Trump is saying one thing and then morning he says one thing, evening he says another thing. It's a lot of confusion. He said, I've signed all these papers, but I leave it to other people to decide how much they'll implement, how much they won't implement. And the Indian government has already started cutting tariffs from the Indian side, trying to please the Americans, saying, see, we are doing things for you guys already. Give us some time, we'll do some more. And all that has already seen effects in the market, which Rupesh has advised me to do tomorrow, but I'll deep dive into that, which tariffs have the Indian governments looked at reducing and how it has an effect on our companies. But I'll talk in broad strokes. If you talk about tariff, once it's reduced in India, all the phone production companies will be enjoying these lower costs of import. EV batteries. There's a whole slew of components which are required for EV cars and EV batteries, which have all been slashed, the tariffs. All those guys are very happy and they're celebrating because it gets cheaper for them. The renewable sector, energy sector, they'll be celebrating this, like solar panels and all those guys. This has led to the share price increase of battery companies such as Exide and Amar Raja. These have been cheered by the market because their earnings will improve. And of course, gold imports have gotten cheaper into India thanks to the stronger rupee and the market conditions the way they are. So these are the reasons why these people are all cheering. So where are the biggest value buys right now? In this current situation, thanks to the FII moving out of the sectors I spoke about, there are a lot of values in that. That means in the bank and the NBFCs, but you have to be very careful. Going forward, of course, a lot of the bad NPAs have been accounted for and written off. So there is no real danger from the past. But there is a lot of danger in the present because there is a lot of murky water still. So keep an eye on that in the banks, in quarter to quarter. What are they declaring? What are the news about it? Especially in the NBFC sector. If you are really interested in these microfinance companies, keep a close eye on their NPAs. That will give you an idea on what is happening. Is the rot over? Is it starting to improve? Have they started lending again? Keep an eye on their quarterly reports and their earnings. That will give you an idea. So what are the companies you're talking about, Vinod? Well, right now, what is on my list, my cookbook? Pharma sector I'm looking at, because all these tariffs Trump has proposed is hurting our pharma sector. Zydus Wellness, Cipla, Dr. Reddy, Natco, all of them are looking tasty for snacks. So I'll leave it up to you, depending on your appetite. That's all there on the menu. In the bank, we have IDFC, KTK, Tamil Nadu Mercantile Bank, South Indian Bank, and of course, IndusInd Bank. Those of you who have a little taste for salt and sour can eat that if you're into it. But I do understand those of you who are panicking. I cannot relate to it. I have also suffered these kinds of panics. So be cautious. If you don't have an appetite for risk, please do not invest in the equity markets at all. A lot of you buy at a certain price and then you're suddenly seeing it going down and you're feeling panic and you're selling it. Try and avoid doing that. If you feel those kinds of urges, it's better that you don't invest in the equity market at all. Sit on the sidelines like watching cricket matches. Like I'm scared of the cricket ball. You know, it's a cork ball. Especially if you have our fast Indian pace bowlers coming and hurling it at you at those speeds. It is quite scary. It's very easy to sit in the stands and say you should have batted it like that. You should have hooked it like this. But when you see a cricket ball coming at that lightning speed at your face, boy, it can be very scary. So if you feel like that, better not play, sit on the stands and watch the match and eat popcorn and enjoy and keep your investments safe in FDs and golds and whatever you feel is safe for you. Stocks which I will not touch right now is the whole IT stocks. There's a lot of confusion there, and with the stronger rupee, it's more pain for them. So I would wait over there. In a FMCG sector, I'm looking at ITC and Jyoti Labs. Those are the what's are really of interest to me. In auto sector, of course, Hero Motor Corp and Tata Motors. A lot of you have been asking about like Isuzu and things like that. I'm not looking at any of those other guys because when we have something like Tata Motors so cheap and Hero Motor Corp, which is a great company, cheap, then I do not look at companies like your parent company of Royal Enfield, which is Escher. I don't look at them. I don't look at Isuzu, and even Ashok Leyland I'm not looking at. If I look at it, put together and see. The reason is, if you're looking at any company, look at the median PE for 10 years, right? Whatever that X amount is, if it's lower by 25% from the median PE, that means the average of 10 years, whatever the price to earnings is, if it's lower than 25% from there, then it starts to come into something you should investigate. If it's not down by 25% from the average, then I would say wait and watch. I know a lot of you will immediately message me saying, wait, but this is on your list and it is not what you're saying. Correct. But some are exceptions. And if I have it on my list, I have done a video about it, why I think that's an exception. If you think, no, I've not done the video, or you don't agree with that video, put it down in the comments or catch me on Instagram and tell me why so. And maybe I'll either do a live feed on Instagram, which I usually do, or otherwise I'll come back here and explain to you why I think it's still a value buy. Keep that in mind. And of course, make sure the debt is minimal or zero, anything which you're investigating out of what I'm saying. And overall, for every 100 rupees you throw in the market, put 5 rupees into gold. Gold will always be something which is a hedge. Hedge means if things turn bad, gold will go up and you're covered. Like Anand said, those who have been with him for 2 years plus will see a lot of profits in gold and will feel very secure when your overall portfolio is still looking very positive and gleaming because of gold. Same way, if you keep going this for the next 10 years, putting 5% in gold, for every 5 rupees you put in 100 rupees in the market, every 5 rupees you put in gold, you'll be rather happy and safe that you did that going forward. I hope that gave you an idea on what has happened this year as a roundup with the FIIs and what the FIIs might do going forward to the next financial year. I've spoken about the sectors where they left and the sectors they have left. We can see opportunities, but be careful when you investigate these opportunities. I've also told you where the tariffs are going to be a bonus. Tomorrow I'll try and talk about IndusInd Bank, and there's some news about Nifty 50 which I think will be interest to you as investors, which I'll talk about tomorrow. Look out for that video tomorrow. Thanks for watching the video. I hope you had a wonderful day and hope you have a wonderful evening. See you again tomorrow with some more interesting news, like I said, about IndusInd and the Nifty. Nothing else more to say. Thank you for watching videos today. Bye.